Hello everyone, this is Selena. Welcome back to today's US stock market recap. Today we're going to talk about what actually matters for traders right now. The key movements in the major indices, the most important tech stocks, and where potential trading opportunities may appear in the short term. Because right now the market is in a very interesting situation. It's not collapsing, but it's also struggling to move higher. And when markets get stuck like this, understanding the technical levels becomes extremely important. So let's start with the overall market. First, looking at the three major US indices such as the S&P 500, for example. Here, so also for the Nasdaq and the Dow Jones, Wednesday's session was relatively weak and mostly moved sideways. Right now, several factors are creating a ceiling for the market. The first one is the short-term moving averages selling just above current price levels. The second factor is the half-year trend lines, and many institutional traders are watching. And of course, the third factor is previous high-volume trading zones above the market. These zones matter because they represent areas where a lot of investors previously bought shares, and when prices return to those levels, many of them decide to sell and exit their position. So, what we're seeing right now is essentially a supply wall above the market. Because of that, chasing the market higher is not the best strategy at the moment. Instead, traders should focus on shorter term opportunities and keep their positions flexible. Now, let's move on to the individual stocks because that's where most of the interest in action is happening. Let's begin with Oracle, for example. Some Oracle's here. Okay, 163. So, Oracle recently released its latest earnings report, and initially the market reaction looked very bullish. At the opening bell, the stock jumped about 6%, which normally signals strong investor confidence. But something interesting happened during the trading session. Instead of continuing higher, the stock gradually pulled back throughout the day and ended the session only about 1% higher. This type of movement often tells us something important about market psychology. Many traders who bought the stock before the earnings release likely used the initial spike as an opportunity to take profits. In other words, the rally attracted sellers rather than new buyers. From a technical perspective, Oracle is still dealing with a short-term downtrend, which meant the trend has not fully reversed yet. So the strategy here is relatively simple. Avoid chasing the stock after a big earnings spike. Instead, wait for a consolidation or a pullback before considering a new position. For short-term traders, there may still be opportunities through quick intraday trades. So next, we move on to Nvidia. I have Nvidia here, 286 with the consolidation for roughly 5 to 6 or even 1 year right now. So it also remains one of the most influential stocks in the entire market right now, especially because of the ongoing AI boom. What's interesting is that Nvidia's trading volume recently increased by about 25% compared to the monthly average. That suggests institutional investors that are still very active in this stock. However, even strong stocks like Nvidia are not immune to broader market pressure. If the overall index weakens, Nvidia could experience temporary pullbacks as well. That doesn't necessarily mean the long-term story has changed because the AI demand cycle remains strong and Nvidia continues to dominate the semiconductor space. But from a trading perspective, chasing the stock after strong rallies can be risky. A better approach is to look for oversold conditions or short-term dips before entering positions. Now, let's move on to Amazon. Recently, there were reports about a data center project in Dubai facing a security incident which created some uncertainty around the company's operation. Even though this does not fundamentally change Amazon's long-term outlook, news like this can trigger short-term volatility in the stock. But technically speaking, there are two key level investors should pay attention to. The first one is support around $145. So if the stock moves closer to the support level, we may start to see buyers step in again. So the strategy here is to watch how the stock behaves near the support level around this area, and um and then you can see if we can consider small positions only if the price stabilizes. Okay, so next we move on to MSFT, Microsoft here, 404. Microsoft has also been affected by geopolitical news, particularly reports about cloud infrastructure facilities in Israel being targeted. Again, this type of news mainly affects short-term sentiment rather than long-term fundamentals. From a technical standpoint, Microsoft currently has strong support around the $300 level up to $400 level. At the same time, short-term moving averages above the current prices are acting as resistance. That means the stock may continue trading within a range until either the support or resistance breaks around these two levels of 344 and up to, let's say, 495. Okay, so for traders, sharp upward spikes may actually create short-term selling opportunities if the stock struggles to hold those gains. So next we move on to Google. Okay, as alphabet here. Google is currently facing some pressure due to its involvement in providing certain intelligence and technological services during geopolitical conflicts. This creates what traders sometimes call asymmetric risk, meaning the stock could react strongly to unexpected news events. Technically, Google is still traded below important short-term moving averages, which suggests momentum remains weak. Because of that, traders may want to focus on short-term opportunities rather than aggressive long-term buying right now. Aside from the major tech companies, another interesting area of the market is overall stocks. Several stocks have experienced heavy selling recently and are starting to stabilize. These stocks often create good short term trading opportunities because most of the panic selling has already happened. When a stock stops falling after a big drop, it often enters a consolidation phase where short term rebounds become more likely. Examples include companies like Coinbase and other stocks that have recently experienced significant declines. The key idea here is simple. Instead of chasing strong stocks that already rallied, sometimes the better opportunity lies in stocks that are oversold but beginning to stabilize. Of course, risk management remains critical. Markets right now are very sensitive to geopolitical developments, especially tensions in the Middle East. That means sudden headlines can quickly move stocks prices in either direction. So, position sizing, stop losses, and patience are extremely important. Sometimes the best trade is actually the one that you don't take. So, to summarize today's market situation, the overall index is facing short-term resistance and limited upside momentum. Major tech stocks are still active but showing mixed signals, and oversold stocks may offer some of the best short-term trading opportunities if they begin to stabilize. For traders, the current environment favors quick decision making, smaller positions, and strong risk control. So, that was all for today's market recap. Tomorrow morning, we'll continue monitoring the market and looking for new opportunities. So, thank you for watching, and I'll see you in the next update. Thank you.